Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Wednesday, September 2nd, 2015. Well, we had an interesting session. You can't tell it from the futures chart here, but you'll see it when we get to the cash indices and the intraday charts. We had a big gap down once again here in the market. Talked about how technical this action was. Here's the ES front-month futures contract. So this is essentially the S&P 500 daily chart. You can see the big drop-off that started 2 weeks ago. The bounce back from that, as we pointed out in the weekend report, stalled out on Friday exactly at the 61.8% fib. That's never a positive place to stall out. Rolled over a bit Monday and then gapped down Tuesday, and now we're all the way back to the third lowest close of the last year, 2 days close below this. And of course, now they've got everybody trapped and locked out. All the people that bought on the bounce, the first bounce, are in trouble. This does not look good from a trading perspective. And as I said all along, this bounce was nowhere near the end of this decline in the markets. Would virtually guarantee you that we will make new lows on this move here, and potentially a lot worse. Let's go through what happened today. So the S&P lost 58 points, and again, a big piece of that was the gap. We'll look at that in a minute. The NDX lost 131. Here you can see the gap. We did try to rally a little bit early, and that just failed, and then we rolled over. The stocks lost 21 points. Biotechs lost 90 points. Almost a new low close there. Google down 18 and change. Still looks healthy compared to some of the other stocks in the market. Apple down 5. The VIX gained almost 3 points to 31.40. Crude oil was back down $4.30. Some wild swings in crude after it hit the static trend line that was in play at the close of the prior session. That's the green line that you see there. Gold futures up $7.90. The trend closed the session at a 4.88. That's a real high number. That takes our 10-day moving average up to 1.92. We haven't seen that in a long time. Some would indicate that this might lead to a gap up in the morning, but that gap could sell off. The advanced decline ratio, highly negative, almost negative 2,000 more decliners than advancers on the NASDAQ. And here was volume at 2 billion shares. At least that was back up. We had some nice stuff. I really would have liked to see it sell off a little bit harder in the afternoon, but it didn't do that. Here's the 5-minute candles on the ES, and here you can see that the gap down for the session was from 1965 to 1925, so 40 points of the move down, and the total move down was 58. So over half the move down was in the gap. I couldn't do anything about it. And you can see we did try to rally once or twice early. Really, the first 2 hours is fairly contained. I mean, it's still 16 points of range, which is average on the ES. And then over lunch, they slowly broke the lows. Didn't really crack it hard. It wasn't until the last hour that it started to come in. And then we got a little bounce very late, a little bit of short covering. NASDAQ side looks about the same. It's nothing special, but it was certainly a reminder of why we shouldn't be buying into the concept that this is over or anywhere near it. All right, what do we have coming up for Wednesday and the rest of the week? Remember, this is Friday's basically like going into a long weekend, or it is a long weekend. So Friday could be very late, especially after the first hour. So Wednesday, we have MBA mortgage index at 7 a.m. Eastern time. We've got the ADP employment change at 8:15. We've got revised productivity and unit labor costs at 8:30. Factory orders 30 minutes into the market. The crude oil inventories, that's the weekly number, an hour in, and the Fed beige book at 2 p.m. Eastern time. So we've got, it's not none of it's major data, but it's spread throughout the day, including the 2 p.m. Fed beige book. Watch that number. Thursday, we're going to have some big stuff in terms of the weekly jobless claims, but also trade balance, ISM services, and then unemployment rate on Friday before we go into the long weekend. This long weekend thing is going to be very interesting because if we continue to drop here the next day or two, is anybody going to want to hold stocks going into the long weekend? I don't know. We'll see what happens. Remember, markets tend to be very, very negative in September. August tends to be positive. That didn't happen. So if we're getting a first warning shot in August, September can get ugly. If you start to hear talk pick up about government shutdowns and stuff, that is definitely going to exacerbate this problem. And we do tend to bottom in the middle of October, so that's 6 weeks off. For this could still go, I would say sideways, but what I really mean is down. We'll be in the lab helping you make money. If you have not taken a free trial of our services, feel free to do so. We have launched a new Tradesight website. Have a look around when you get a chance. We welcome any feedback. Charts, as usual, brought to you by eSignal. Have a great trading week.